Good morning, good afternoon, good evening, and welcome to the Bull versus Bear webinar. Steve Miley on the call for trade day on Wednesday, the 30th of November. Let's start off with the date, Wednesday, the 30th of November, last day of the month. So just to highlight here, sometimes we get some month-end shenanigans. We sometimes at the month end, we get index reweighting, portfolio reweighting, we get various fixes on the forex side. So all sorts of things can happen at month end. November month end, not necessarily a massive month end, but nevertheless, we can get some things happening. So sometimes on month end, we see some market moves kind of non-expected, exaggerated market moves, accelerated volatile moves intraday as we get some window dressing, sometimes it's called, as portfolio management goes on. Or there's some index rebalancing maybe. So do watch out for that. There might be something happening. It might look like there's a piece of news. The market might start moving aggressively in one direction. This is a focus sometimes we have at month end and something you should be aware of. Usually on those, you don't panic. Initially go with them, but as soon as you kind of see them peter out, once they kind of seem to end, then the market can often mean revert. So watch out for that. A choppy, like a market could accelerate in one direction over a matter of minutes, or maybe a matter of like 30 minutes to an hour, as we get, maybe some funds all moving in the same direction. And then once they're done with doing what they need to do, you can get a mean reversion, i.e. moving back to the average, i.e. the market retraces the move that it's done. So do watch out for that, not just for today, but generally at month end. Okay, next thing to talk about, just Technical Tuesday. We launched our Technical Tuesday yesterday. It's in here, Trader Education. This is where you can see the live one. There probably won't be no one next week. We're probably going to do a Trader Mind, which you can also get down there in this Trader Education drop down. Technical Tuesday. If you want to, excuse me. If you want to see the catch up, you can just click play in here. You can see it's about 30 minutes long. Go in and take a look at what I did yesterday. We'll be advertising a Trader Mind session. James is actually currently visiting the UK. So whilst he's here, we'll be doing probably a joint broadcast for the Trader Mind session from the UK at probably the first part of next week sometimes. Watch out on the various activity feeds. On the headline, on the Daily Digest, on the streaming headline in here that you see in the trading room. For more details on that, we will advertise that, probably send out an email as well. Right, let's move on for today. Looking into today, we have had in here this morning some European inflation data. So we had French CPI in here in line with expectations. And then we also got German employment data, slightly missing, so worse than expectations. Eurozone CBI lower than expectations, so that's good. Okay, that's good, lower than expectations in here that we've had so far. In just under 45 minutes, we get ADP, non-farm employment change. Remember, this is the precursor. This is the estimate of what Friday's employment number is going to be. Non-farm employment number is going to be. We're watching out for that. The ADP number recently, or I say recently, over the past multiple years, that tends to not massively move markets, but nevertheless be watching that. And then just under an hour's time, 15 minutes after that ADP non-farm employment change number, we get GDP data coming out from the US. Remember, this is quarter on quarter Q3 preliminary number. Q3, right? So very backward looking. So how important that is, does it usually move markets? Not particularly so. So not looking for this data to probably move the market too much unless it's very much out of line. Chicago PMI 9:45 Eastern, and then later on at 10:30 Eastern we get crude oil inventory data, and then this afternoon in the US, Powell is speaking at 1:30 p.m. That's really the main focus going into today. And then overnight, we get further Chinese PMI data in here. The first of the PMI data, we get the rest of the PMI data coming then through tomorrow, going into Thursday. But that's going to be the focus today. Really, the main focus today, Fed Chairman Powell is speaking. Let's take a look at 5 things you need to start your day in here. So China's law enforcement cracking down on the the protest that we saw from over the weekend. Overnight in here, Bullard has been, I would say, slightly more hawkish. So estimates for a late price at least 4.9 would be needed. And that's kind of what the market is pricing in, right? Soaring debt costs, focusing on that as well. Nothing's going to really impact us so far. And US equity futures and European markets are up going in this morning. And all eyes on Powell for his 1:30 p.m. Eastern time speech, which we've already gone through. So stocks are up this morning. No massive real reason in here for the slight rebound we've had. US equity futures higher, dollar went back lower. Waiting for the speech in here and looking at the Chinese economy reopening, but nothing really. There's been no real news overnight. Oil rises back above $80. OPEC Plus in focus. Remember, that's going to be at the weekend. Okay, Off-road for Thursday is data point to a large decline in US oil stockpiles and raised the outlook for Chinese demand and the forthcoming OPEC Plus. So oil up, OPEC Plus predicted to hold output steady as moving moves online. That's coming up over the weekend. World stocks in upbeat spirits, so just higher again. So there's nothing really in here, guys. I'm just running through these, but I mean, just basically stocks have had a slight rebound, having had a slight dip back further lower last night. European stocks are up between 0.4 and 0.7 in here. The French, German, and UK markets up, pretty much 0.7, 0.4 on the DAX. And then if we look at the US indices having dipped overnight, the Dow was actually pretty much unchanged yesterday, but we're having dipped lower yesterday. Slight rebounds, but there are slight. Nasdaq's up 0.4. S&P 0.2, and Dow is about a tenth higher. It's going to be a fairly short meeting here today, guys. So we did do the technical Tuesday yesterday. We highlighted this potential double bottom. The market was up here, and then we're on the open. The market did shoot higher, but then we were below. Remember, we looked at these little levels here as a potential reversal levels, and then really needed the double bottom through there. The market didn't get above there, and then we sold off after the open, and then have climbed back higher through going into the close, and then we climbed even higher here overnight, and now we're reversed. Remember, I highlighted, if you did come on the technical Tuesday, I highlighted this as probably the most important of the trend lines. These trend lines here have already been reversed. Okay, so we've reversed those trend lines so far, and then these two in here that I'm looking at were reversed. Obviously, that was actually redundant now, but this one in here, let me just get rid of that one there. Remove. So this one in here was reversed overnight. Okay, so probably not as important, but that's an important trend line. You can see you get third touch in here. The market gets almost a third touch there. Then we get a little breach here. The market goes close here. It's a really good trend line, this one in here. So that comes off the peak from, I can't quite see it there. 1 second. That comes down from the 28th. Okay, so that was on Monday, from Monday's peak in here, down through the high there. And then you get multiple approaches here, and then a little breach there, an approach here, and then we reversed it. But then this was reversed after overnight, in the overnight session in here. And the markets are pushed higher. I mean, ultimately, that peak there and these little peaks in here that we flagged previously, and the market's just stalled. No doubt going to wait at least until the US Open. You might get it through the GDP number, but that peak there, I think, is going to be important now. That high there, 39.81.75, and this little string of peaks in here, which are like 83 kind of to 80, 83, 84 kind of area. So those are, and then if we obviously get through there, that's going to reinforce the break of this red trend line. Okay, and then ultimately that peak there is going to be important. It's not a double bottom anymore, but that peak there is going to be even more important. That one there is up at 90.25. Okay, so those are the levels we'll be looking at on the top side. Downside, really, you've got this string of what we would call platform supports. You see all in this area here, and then over here as well. So they kind of range in here between 65 down to like 62. That whole area there, I think, is important on the downside. If we break back down through there, then you're potentially looking back down towards yesterday's lows and maybe below. Similar story on the NASDAQ. So in here, zooming in, I'm going to extend this trend. And remember, we looked at this yesterday. We just dipped into this really good trend line. Third touch, get the third touch there. And if I extend this one out, if it will allow me to do that, it's always a bit fiddly with this. Here we go. And look at that. That's beautiful. So that is what the market is really, in my opinion, from a technical analyst point of view, this is what the market is respecting right now, right? It needs tech. Tech has always been a big driver for the US markets. It needs tech in here. And that's not a channel. That's just a drawn between these two lines. But it is, you can see it's almost parallel. So it's almost a channel. So that even reinforces for me even more the importance of that level in here. So can we do... no, it doesn't allow me. But yeah, that reinforces to me that this trend line is really strong. The fact that it's respecting the kind of what's effectively the equivalent channel. If I just drag this one across, you can see it's pretty much got the same slope in here. So if I actually even that up to the same slope, actually can I just duplicate this one? No, it doesn't allow you to duplicate, does it? No, but I can just get this one towards the same slope in here. So there we go. And then we place it as a channel down through there. And you can see it works really, really well. Okay. So drawn off of this point between these two. So the channel is drawn between this high here and this high here. Off of this point here, it's a parallel line. You can see it touches again. And then we touch, breach, and then come back and touch again. So this is a great trend line. This says the channel that's drawn parallel to the trend line reinforces the trend line because the market is respecting the channel. Okay, so this makes this trend line really important. I think a break above that trend line, you can see the market right up on it. It's gone up earlier on today, about 2 hours ago or so. In here, we went right up there and then fell back lower, and then we're sitting right below it now. Post open. And certainly post data, then post open, then it's going to be on to PAL. But we could be up and through here. I think just above the overnight high in here is enough to probably trigger the upside. 586.5 up through there. Definitely then reinforced all the way up here through this level, which is 638.5. But up through there will then reverse the trend line. If we don't reverse the trend line, then you're looking at this kind of support down here at 528. Where's that? 528.25 down through there looks more negative. So I think that's a really super. This, if it breaks up through here, it's going to then take the S&P up through its trend line as well. Well, up through, sorry, not the trend line, up through these peaks in here that we've already identified, these highs. Okay, so certainly watching that trend line on the Nasdaq. Even if you're trading the S&P, I think this breaks, this will accelerate, and obviously takes the S&P with it as well. So watching out for those in here. Let's have a quick nod to gold and oil. Start off on gold. Here's the daily chart. We went into yesterday slightly bullish in here. We did get a dip back lower, but it's back up higher in today. Look, sitting right below the recent peak in here from Monday. And it is choppy and sideways. You can see that choppy sideways, but it looks like a bigger base forming. This is a much bigger base forming. And I think simply now we're actually, it looks like we've got the wrong month. I think we're off a deck, right? Let me double check the months we're on. I don't think DEX front months anymore. I think we've rolled onto GJG, it says to me, 23. Okay, let's go and add that in then. I think GC and then G. I think we're here on front months now. Yeah, I think so. So that's February. I think February's front month now. Okay. But again, the peak there. So adding in February, guys, I would suggest, because it looks like in here, if we go here, the data is certainly, and I'm just going to go and double go and click in. I'm just doing this offline. You can't quite see us here, what I'm doing here. But it looks to me that, that February is now the front month. Okay. So up through that peak there on the February contract, that's 1763. So it's GCG in here. I said we're not running deck as front month. So I'm just going to close that tab. And that one there as well, just to get rid of those. Okay, so that's what I'm watching on the top side in here for gold. And if we go on the downside for gold, you're probably looking at this little, you got that spike low and trend line. You got the trend line that comes off the low. Okay, that works quite well, but probably the internal trend line here. But then the more recent one in here, just from overnight, from yesterday, I think it's going to be the one we're watching today. So down through there, and then also down through the recent little swing low in here. So back down through 1772. It looks more negative in here. Certainly down through the trend line, which is more like 1770. 1772, 1770 looks more negative. Looking for the upside up through that peak there, 1778.5. Remember, this is, as I say, on the February February contract. Okay, let's take a look at oil. January contract on oil pushing higher. Strong day yesterday. We talked about this doji candlestick at the bottom, the turning point from Monday. Strong session yesterday, up through the peak in here from Friday already this morning. And also we would be reversing this or getting close to this downtrend line. So I'm going to have a look at that bigger downtrend line. I'm going to zoom out a little bit so I can see that a bit better on the 30-minute chart. I'm going to remove all the old analysis in here. And I'm going to widen this right the way out so I can see. So here's the bigger trend line. So this trend line up here that comes down from so this is the 7th of November. So I'm looking here at this downtrend line from here, from the very top. Okay, I'm going to look at it on the 30-minute chart though, and seeing how close we're getting here. Look, bang, we're right there. Okay, we've gone right there today. And again, from a Dow theory, you've got lower lows and lower highs, kind of hesitant in here in this period here. We did make then a new low. And then overnight, look, we've made it above that high there. We've just pipped above that high there. That high there was 79.90. So we've taken out that high there. We were a little bit hesitant here overnight. And then just recently, we've taken out that 79.90. So we've got a Dow theory reversal in here, and now we're waiting on the trend line reversal. So basically just above the overnight high, 80.37 will be enough for that, and then it quickly aims up to here, 82.40 area, and maybe even higher. So yeah, looking for that break of that trend line. It's a good trend line, really solid trend line there on oil. I would suggest watching that one there. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. I will be back with you for another Bull versus Bear webinar on Thursday. Until then, stay safe. Take care. Bye.